Instagram as soon as I can. Let's make sure this is working. Okay, it says it's streaming. We should be good. And there we are. All right. Go live on Instagram. All right. That's pretty cool. All right, here we go. Let me just. All right. Okay, here we go. Okay, today on the show, my guest is tax guru Shahar Plinner from Formations Corp. Let me tell you more about Shahar. Now, Shahar Plinner is an entrepreneur and a tax expert on a mission to disrupt the status quo for real estate agents. 18 years ago, Shahar moved from Israel to Seattle and founded, scaled, and sold a leading tax and accounting firm with a presence in Seattle, Silicon Valley, and Tel Aviv. Now, during this time, he developed a playbook specifically for 1099 agents, which inspired the launch of Formations. Today, as co-founder and CEO of Formations Corp, Shahar continues to champion the cause. Formations is a tax management solution for the self-employed, empowers real estate agents to save thousands on taxes annually, make better financial decisions, and democratizes access to corporate-level benefits such as quality and affordable healthcare, as well as easy-to-implement retirement solutions. I want everybody, even if you have an accountant, to go visit formationscorp.com. Guess what? I have an accountant. I'm going to check it out because even if you do have an accountant, you may not have the perfect accountant for your situation. So go to formationscorp.com and learn more. Shahar, welcome to the show.
Hey, DJ, thank you so much for having me. It's a pleasure.
Well, this is really embarrassing because I'll pull back the curtain on the show. So oftentimes I get to the episode just a few minutes before we're recording, and my team puts all the notes together. And so as soon as we got on, I was chatting with Shahar before we started, and I said, "Boy, that sounds like an Israeli accent." And then I asked him, I go, "Is that Israeli?" He said, "Oh yeah, it is." And then sure enough, it's right there in the bio that I was going to read 2 minutes later. So Shahar's like, "Wow, this guy does no preparation for the show." So I apologize. Again, it's behind the scenes thing, but anyway, super excited to have you because right now it's towards the end of February 2024. We are coming up on tax season. It's already tax season. And this is the time for realtors to start thinking about their expenses. And of course, all the money they are either going to get back or they have to pay in to Uncle Sam. So really excited to have you. I think this may be the first time in 550 episodes we've ever had a tax guru on specifically for realtors. So really appreciate you being here. And let's get started with, how did you've been in taxes for quite some time. How did you get into taxes? What was your path there?
My path was, how can I be as far away as possible from my family-owned business? As someone that grew up in a family-owned business, only, someone that's been there can understand, the dynamic of being, working for your dad, your mom, your brother, your sister, and have all of these co-mingling of emotions, between, how do I separate my dad, my parents from, work? And it's impossible. So me as youngest, basically a family of 3 boys, and I'm the youngest. I rebel and basically, made the decision that I'm no longer part of the family-owned business, and I look for something in finance, something in numbers. And I don't know, it was, I couldn't explain how basically I came, into the tax world, but basically, I got introduction to a person that basically showed me the tax world, the U.S. tax world, and I find it amazing. It's a whole world of opportunities and possibilities. And I think me as a service provider in nature, put myself kind of the mission to be the extension, or basically to be the liaison between the systems, that speak sometimes such a complicated language. And me as, English, my second language, I'm speaking Hebrew fluent. I had to basically use my whole English vocabulary, to democratize tax code to the audience, and it worked. It kept it super simple, super engaged. And being in taxes, you always feel that you're kind of the Robin Hood. You're the good side of the government, allowing people the access to the knowledge and basically to show them what is really possible. And what we're telling people about taxes, and I love your kind of keep it real. It's real. The savings and the things that you can actually enjoy from the system is real, translate in more money in your pocket. So I love, the concept of taxes. I see taxes, I come really, I'm fortunate to see something complicated that most people are really struggle with. And then when I start my journey, I just, I felt that I'm in my zone. I'm with my people, and this was kind of the foundation of, my journey in taxes. And if I can stay in taxes for the rest of my life, this is what I want to do.
Well, we're going to be paying taxes for the rest of our lives, so it makes sense. It's one of those, those jobs that and also it's one of those jobs that it's like a dentist. They're just always going to be needed until maybe there's robots to do everything else. But until that time, and and really, quite frankly, there are robots right now to do taxes. We've had automated tax software solutions for probably 20 plus years, more than that, I'm sure. But a good accountant can see through a lot of what the algorithmic software solutions can't. And so I know too that when I got an accountant, which was about 13 years ago, and I never thought I had needed one before because I had a fairly simple situation. But since I started to become a 1099 employee, so even though I'm not a practicing realtor, for our audience that probably knows that already, I am paid very similarly to how realtors are paid. So you can consider me a realtor for this conversation because, I have to pay the same sort of taxes that you guys do, and I'm taxed the same way. But when I got an accountant, it really changed my outlook on taxes. It actually became something that I was a little bit excited to work on every year because I was able to save more and of course pay less and keep more in my pocket. So I'm really, really excited we're going to do this today. It's sort of one of those topics that I think a lot of people could feel like, oh, it's not that exciting, but honestly, to save money to me is very exciting. So we'll talk about that, and also just to stay out of the crosshairs of the feds. None of us want to get those big letters from the IRS. And so having a good tax professional is really, I could not, this is your business. Of course, I'm talking not to Shahar, but to our audience. This is your business. Treat it like a business. Every business really has an accountant, or they should. This is the same thing you should treat yourself to. So let's talk about that. So I would first love to get a talk. Let's talk about first saving for taxes, because realtors are paid in lump sums. Their taxes are not taken out prior to getting paid, right? So they are responsible ultimately for putting a certain amount of money aside. And I'm just curious if you have any best practices there, such that I know when I have money in my bank account, I'll tend to spend it. So, do you have any sort of suggestions for agents when the money's coming in, sort of how to separate that out so that come this time of the year, you're not like, oh my God, now I have to write a $20,000 check that I didn't expect?
So I think like everything in finances, it's all about planning. And I think that agents need to understand that there's a great system around them. When we speak about the tax world, we always say that the tax world is geared towards corporations. When you have the umbrella of either corporate America or your W-2 employee, you're protected. The employer is bringing a lot of awareness. They recommend you to do things. They put, benefits and ideas of how to save money in front of you. None of that is existing in the world of our 1099 people. There's no way for us to consume information from our corporation. We need to basically, navigate that complexity on our own. And I think when it starts with financial education, it's about know the system. When real estate agents start practicing, I believe that most of them enjoying real estate. This is why they get into the occupation, and they believe in themselves that they can actually perform the relationship with their customers, because we know that real estate, it's a very intensive relationship industry. It's not about sales, it's about, drive the relationship with your audience, so you'll have those transactions and the funnel, in front of you, build with prospect and potential people that you can buy or sell their businesses. The same, with every aspect of your business. We are all about, people business. And you mentioned about the relationship with your accountant. Pick your dream team. I think we speak about, the dream team as something is super important. And sometimes we, pick the dream team in the areas that we feel that has the most amount of impact. And we like to identify that actually accountants or people that move money for us or deal with money for us has the ability not just to be just a cost saving, but a profit center. Because when I basically delegate stuff, to my accountants, and I can act based on information, based on numbers, based on insight, based on data, I can actually make better financial decisions. And I think what's important for us to make sure that real estate agents and what top producers are doing, they set goals. They make some strategic decision, and it starts before the actually money comes into my account. It starts with my entity structure. DJ, 90% of real estate agents still sit in a sole prop, unincorporated structure in 2024. Why? It's lack of awareness. It's lack of basically, understanding that even just by moving into a single member LLC, you're not changing your tax position, but at least you get the limited liability protection. You get the branding. You get basically the credibility of me treating the business like a business. And then when I am already an LLC, then they move to, a different tax efficient structure, like an S Corp, it's a distance of a one form that you can fax to the IRS, for them to accept your S election. So I think knowing your option, knowing your system, it's number one thing that we ask real estate agent to lean in. The same as you learn, how social media works for you and CRM system and how do you manage customers at the front of the house. We ask real estate agent just to be a little bit more open for financial content.
Yes, I agree with all of that. I would like to start with, let's talk about the advantages of moving from a 1099 1099, it's not employee, a 1099 contract to either, some sort of corporation.
Yep.
So I think let's start there, because as you said, 90% of agents are not taking advantage of the corporate tax structure. Why should they?
Mainly because of the tax savings. So when you basically run a business in the US, you're subject to 3 tiers of tax mainly. Again, you have your state that you reside, that will tax you either as a state tax, or B&O tax or franchise tax board, but there is some relationship between you and the state. And then when you go to the federal level, there's some relationship between you and the IRS. But then us, as a 1099, as a self-employed, we are also exposed to an additional tax, self-employment tax. And the self-employment tax in the US, 15.3%. You're basically paying double than your W-2 friend, because it's your W-2 friend, he pays half and the corporation is paying, half. You as the self-employed are subject to both sides of self-employment tax, 15.3%. And this 15.3% usually comes as a surprise at the end of the year, because you think about it. If I made just $100,000 net at the end of the year, boom, I'm get surprised with about $15,000 extra tax on top of my federal and state taxes. S corporation pays zero, because again, corporations are not human beings. They're not paying Social Security and Medicare. So just the move, to file my taxes as an S corp, and don't get me wrong, there are some requirements to run a healthy and compliant S corp. But in general, just moving into an S corporation structure can save me 15% self-employment taxes. And again, if we're talking about top producers that are making $100,000, $200,000, $300,000 a year net profit, just by addressing the self-employment problem, I can save myself between $11,000 to $18,000 a year, which means we let real estate agents just sit and think about it. Imagine, close your eyes, what could I do with with an additional $1,500, in my net to my overall financial well-being, how much more I can contribute, and provide to my family.
Yeah, I mean, you're right. You're talking about, yeah, about 1,500 a month or so in savings, and per 100,000 that you earn. So we're talking about, or a little bit less than that, but essentially a huge amount of money here. 11 to 18,000 per 100,000 that you earn. Even if you just took that money and threw it in a savings account or a money market right now, you might be getting 5 or 6% just on that. I would certainly much rather let that accrue interest than give the government that money for no good reason other than I just wasn't structured appropriately. So step one would be, or incorporate. Would is that am I
Correct.
understanding that
So again,
correctly?
step number one, get yourself into the single member LLC, because this is the entity that governs you on the state level. S corporation, it's a federal election. It's the relationship between you and the IRS. So you continue to be an LLC, for us in the state of Washington. But then with the IRS, I asked their permission to tax me as an S corporation. Now, you mentioned something super cool about, hey, let's take this $15,000, and put it in some saving account. Let's make more money. And I'm asking you, let's put your $15,000 into a solo 401k, because now I can save 30% on that. So now
Yes.
I take money that the government is basically paying me because I'm not overpaying on tax. And now I'm putting into my retirement account, and we can speak the benefits of a 401k, SEP IRA, traditional Roth. Each and one of them has a role in the life of the real estate agent. But let's say that I'm using the most common retirement plan by corporate America, the 401k. If I put this $15,000 into my 401k, there's an additional 30%, tax saving, because now I defer this income, to my age of retirement, call it, 70, 72, which again, 30%, $15,000, another 4,500. So 11, 15, 4,500. Again, you're talking about $20,000 a year tax savings between entity structure and retirement plan. And this is before we start optimizing your expenses. And I want to come back to the expenses maybe a little bit later, because one of the things that we try to educate top producers, expense is not a strategy. When you expense, that money never come back to you.
Right.
But when you invest, or when you basically save, or when you use retirement mechanism, you actually use it as an expense, because the business can write off those items, but the money stays with you. The money stays with other people within your family. This is a pure, increasing wealth, for you as a business owner.
Yes, all of that makes so much sense. I really like the idea of the retirement savings, as well as whether it's a SEP IRA, a 401k, some sort of tax deferred retirement plan, because this money will go in pre-tax, right? So Shahar said that. So what that means is, you get paid on a commission, you take a certain percentage of that, throw that into your retirement plan. That money is not taxed until it's pulled out, however many years later. This, of course, is a great retirement saving strategy. And when you pull it out, odds are you'll be at a lower tax bracket, because you'll likely be in retirement at that time. And if you're still at the high tax bracket, well, then you're doing great. But at least you've deferred all of those taxes until until the end. And all of that growth, of course, is wonderful. But that money doesn't get taxed right away. So that's a wonderful point. And there's ways that you can access it with penalties before you retire, but really is a great tax saving strategy for retirement, and also just for current taxes. So you're absolutely right. The money that you'll save going from 1099 to incorporation is something that you can use in a number of different ways. If you need the money for things you're saving for, then you can put it in, in the market, or you could put it in an IRA, sorry, not an IRA, but taxable investment account, or you could put it in a pre-tax account, which it would be an IRA, or a 401k SEP as well. And so, yeah, these are great ideas. And really, we're talking about saving 15% of of this money that you would be giving the government if you weren't incorporated, if you're just a 1099 contract employee. So huge opportunity there. Also want to talk about with respect to income, do you have a suggestion for agents when they receive a commission check? You talk about planning, of course, being the most important thing. Do you encourage agents or 1099 employees or 1099 workers to have separate accounts in banks for when a check comes in, a certain percentage goes into my tax account that I'll be using to pay later, or do you what's sort of your thoughts on that?
So, by the way, you mentioned overpaying on taxes. In 2022, by the way, based on the IRS information, self-employed individual paid $220 billion in self-employment tax. They moved to an S corp on most of them. If you can, again, can save you 60% of it. So you're talking about gazillion amount of money, that are bleeding, basically what you call unmanaged, into the system. So LLC, first step, because we want to separate our entities, from me and my business. I want to bifurcate the Shahar from Shahar LLC or Shahar Inc. I want to make sure that there's a separation of entities. And then, yes, the natural next thing is to have a separate bank account. And the number one mistake that we see real estate agents are making is co-mingling of funds. And when you co-mingle of funds, there's two things that basically you disservice yourself or harm yourself. One, you cannot get visibility into the real numbers. So you're acting based on inaccurate data to make financial decision. You don't know, if you're profitable. You don't know how much you spend money on. You don't know what is the real kind of net profit. If it even makes sense for me to stay in the industry, because at the end of the day, we're making it because we create our own reality, but also we're making it to provide ourselves, a decent living. So this is one. Second, it's the number one reason for the IRS to come and either revoke your S election or basically make some changes into your tax return. It basically, the IRS go after this co-mingling accounts and basically pull all of the transactions that are personal. And there's no reason, again, to take advantage, as we mentioned a couple of minutes ago, with expenses, because I can create a very efficient tax structure with the right S corp, which is the thing, the retirement plan, and some expense management. But it's all about habits. So the habits is, if I am running a business, let's make sure that all of my business expenses run through my business. And if I have some personal expenses, make sure that I'm taking, all of those expenses on my personal side. And if there's something in the middle, yeah, go aggressive and deduct it through your business. Worst case, at the end of the day, when we do your bookkeeping and when we kind of manage your P&L or your expense spreadsheet, we'll throw out some of those expenses that we feel that, a little bit too much for us. But managing your business expenses is should be set and forget. It's not something that you need to pay attention every month. You set the chart of accounts once. So we said, first step, LLC. Second step, business account. Third step, cheap accounting software. You can buy Zero today at $7, a month. You can basically go to Hurdler for $10, a month. You can find cheap online solutions that will bookkeeping for you, that will give you all of this expense classification automatically, directly from the bank account. It pull all of the transaction, it clean it up. Such a life quality if I don't need to do it manually, or I don't need to wait until the end of the year to do it. When I do it live and I have live information in front of me, I can make so much difference in my business.
You said something that I hadn't really thought about with respect to mingling funds. So even if you have a business account and you are set up as a corporation, whether it's S corp, C corp, whatever it may be, I have all of my income to my business going into my business account. What I don't have, and you just made me realize that this is something I need to do, is I don't automatically take a percentage of the income that comes into my business and put it in a separate account just to hold it there for taxes. And I've done this long enough to have a pretty good idea of what percentage that should be just to protect myself. But you're right. As a result, when I count up my income at the end of the year, I'm not taking the taxes out, so the numbers aren't really that accurate. I'm just seeing the blanket, revenue that's coming into my business, but it's not really the right number, as you were saying. So this idea of keeping things separate is so important. I want to talk about S corps, because this is probably the most common type of structure that realtors find themselves doing once. I know that S corps don't necessarily apply to every realtor based on how much income their business is producing, but it can make sense. I know for me, it made sense when I got to a certain income level in my business, and then it was a no brainer. But let's define, because there's most of our audience probably doesn't understand the benefit of an S corporation. Actually, before we do that, I'm going to back up just one step. Let's first talk about the benefit of being an LLC before we subcategorize into like S corp, C corp. So let's talk about the benefit of it. You mentioned some of them, but I also, the idea of a limited liability, let's talk about what that means, because realtors can be sued. And my understanding is there's protection built in to LLC structure that would make lawsuits a little bit more palatable, or less scary if somebody comes after, because they would come after the business, correct, versus the individual.
Correct. And then what we usually recommend to those individuals is that don't own or hold any assets within the LLC. Bring your commission, make
Right.
sure that you have, your expenses, maybe, some payroll liability, maybe some 401k liability, but there's no assets, which means if someone decides to go after you, you will find basically an empty shell, of an LLC. There's no much assets. You can take the cash out and there's nothing to go after. But again, we're not building, on the LLC to protect you. We want to make sure that you do things, very ethically, and also to make sure that you have the right insurance in place, which again, it's a business expense. Those insurances you mentioned, the tax allocation. DJ, if I need to ask you, how much, like if you're making $200,000-$300,000 a year, if you in your mind, how much would you set aside for tax? How much would you set aside? What is the percentage amount at every check that you set aside?
So this is embarrassing because I don't do it and I don't really know. But if I had, I mean, this is embarrassing. I just do what my accountant tells me, which is
Try to
also
guess.
not. So if I had to guess, I would say 30%.
Yeah. So again, we are telling people don't put a dollar above 20. If someone is making about $250,000, your tax liability should not exceed, 20%. And I think this is going back to your kind of the dollar amount. The old equation was from every dollar amount, there's about 33% going to maintain business and 33% for tax, and I maybe take home 33%, ish. The formula in 2024, because of social media, because of digitalization, because the way that you can run a very efficient, what you call business of one, you should not pay more than 20%, in taxes, and you should not pay more than 20% of expenses to keep the lights on, which means in the new world of 2024, we see top agents taking 60% home. And when we think about, profit first, and profit first is kind of the envelope system, which is income minus my profit equal my expenses, it changed the entirely mindset. Because if I put a goal that for every dollar coming into my business account, 50% is going into my side, it's going to pay my taxes, which is my benefit. It's going to fund my retirement. It's going to basically, fund my HSA, my health savings account, my FSA, my flexible spending account for medical. And, if I have kids younger than 13, I can pay, out of the business $5,000 for my pre-after school expenses. It's to fund basically maybe my kids' payroll, maybe my kids' retirement. Again, there's so much things that I can keep money within the family, and then the 20% to keep the lights on, because we know it's almost like it's the toothpaste theory. When we have more, we spend more, but when the toothbrush kind of the toothpaste is almost done and we can squeeze another brush, magical, it's like a magic in the air. This is the same with business. We see business owners when they have more and the wealthy kind of the wealth is coming their way and the balance sheet become more kind of with cash and with some spending ability, we see people spend more money, and we want to let them know, no, continue to be disciplined about needs versus want, and you'll see that dramatically increase in your take home money.
Yeah, I agree. I know I pay a lot less than 30%. Usually in the low 20s, maybe 20 is
Yeah,
about where I'm at. Because of the S corp structure. It is almost a bit magical and something that will be very surprising in a good way if you've never done it. You will find that boy, it is a really nice structure. And so, number one, you're limiting liability for in case anything someone decides that they thought you did something nefarious, they can go after it, but there's no assets held within the organization. So that, of course, protects or at least somewhat protects you. And then, of course, the tax benefits trickle down because my understanding is S corporations have a pass through. Where, in other
correct.
words, can you explain what a pass through is?
So in the corporate world, there's two set of tax. There's the C corp, the traditional tax, corporate tax that is double taxation, which means when I'm running a C corp, a traditional corporation, when the money comes in, I'm getting taxed. I'm paying, corporate tax. And when I'm taking the money out in a salary or a dividend, I'm paying a second layer of taxation. LLC and S corporation are considered to be a pass-through entity, which means there's no corporate tax. When money comes in, it's not getting taxed. When money get out, it's the first time that it's getting taxed and only on one federal rate. So S corporation has two classes of tax because I can take money out of the S corporation in two different ways. I'm taking money in the nature of wages, what we call reasonable compensation, because the IRS forced us to take a reasonable compensation. So we'll pay some Social Security and Medicare, but it's definitely far beyond 100% of the bottom line or 100% of the net. This is why, there's some margin of tax savings. And then what I'm not taking in the nature of a wage, I can take out in the nature of distributions. And those distributions are not subject to self-employment tax. So as an S corporation, again, the pass-through element is only one layer of tax on your individual tax rate. There is no corporate tax on the S corporation level.
And because in most cases you will be the sole owner of the corporation, you ultimately the entirety of the assets held within the organization are the business's assets, but you are the sole owner. So ultimately, we're all under kind of the same umbrella. But where it really benefits agents is, as you said, the salary. So within an S corporation, I know that my accountant tells me every year, here's the salary you are going to pay yourself. So Shahar said something very interesting. So that the IRS, you would think the IRS would have a very strict sort of algorithm or calculation to say, okay, you DJ has an S corporation, and your business makes X amount per year, so you're going to need to pay yourself Y. You would think there's a calculation, but there really isn't. There's just this idea of fair and equitable, or what are they, fair and reasonable salary. And there, I think they've tightened up the language a little bit in more recent years, but because I know I used to pay myself a lot less of a salary, but I still pay myself much less as an employee. I am an employee. I'm the sole employee of my own corporation. This is how realtors do. Top realtors all do this. They become an employee of their corporation. They have to. IRS says you have to pay yourself something fair and reasonable. So the accountant can work with you to say, okay, we think this percentage, or this is the correct amount. This is, of course, you don't want to try to figure this out yourself. Definitely work with a tax professional because this is what they do. And and then what you'll find is your salary is probably much less than it would be if you were just a 1099 where you're paying taxes on all of it. So
Yep.
this is a huge benefit. If I were to show you what I pay myself every year, you would be like, wow, DJ's not doing very well.
Hmm.
But I'm actually doing quite well because my corporation holds the majority of those assets, or assets being just the income.
Yep.
And I only pay myself what the IRS tells me I need to, and I use my account to figure out what that amount is.
And I think this is something that you mentioned. Again, we're talking about common mistakes. Not knowing S corp is a thing. One big mistake. Everybody should at least consider S corp. And for most 1099 real estate agents, again, if you're making more than $80,000 a year, S corporation will pay big time. Second is the payroll concept. Because it's pretty odd, I've been sole prop for the rest of my life. I never took payroll. I just took money out of the cookie jar.
Right.
Now I need to be a little bit more disciplined. I need to run payroll. I need to run distributions. People believe that or think that payroll is a chore or payroll is something bad. And they don't understand that actually payroll is your enabler. Payroll is the one that if you take it reasonably and you not abuse the system, it allows you to not pay self-employment taxes on your distributions, because you actually prove the concept that you know how to use the W-2 payroll concept. But second, paying self-employment taxes or Social Security, Medicare, FICA is the enabler for banking. It's the enabler for lending. It's the enabler for retirement planning. It's the enabler for so many great corporate level benefits. So part of the formation's education system is we try to educate and break the status quo around payroll and letting people know that payroll it's a great thing for them to consider. Again, on the S corporation world, it's a must, but the reasonable compensation, how much money do you take, as part of the payroll, should basically be tailored for your needs for that financial year. Because if I don't need the payroll, I may go all the way to the floor, to the reasonable compensation allowed by the study that we're doing, and we're performing a study to make sure that those numbers can be defended in case the IRS is asking. But think about it, there are years that actually I want to inflate my payroll because I want to over-contribute into my retirement, or I need my W-2 for lending because I know that many of our real estate agents, listener, savings, the retirement with rental properties. How do I buy a rental property? How do I get a loan or a mortgage without my financials? Almost impossible. So what we want to do with an S corporation is not just to take advantage of all of the benefits, but to position the S corp in such a healthy way that you will be a banking sweetheart. That everywhere you go, people will want to lend you money because your financials will show that you're super strong and healthy.
And so Shahar's bringing up a really good point. So I think this is an important topic. So I will tell you where people tend to get a little nervous is around refinancing a mortgage or purchasing a property when they have an S corporation status, meaning they have a company that they own, a corporation, and they pay themselves a fair and reasonable salary, which is going to be significantly less than if you were, because you're a W-2 employee of your own company. But let's say you were working for a large corporation, not your own company, and you're going to be saving a lot more in those taxes. But what happens when you go to apply for a loan is, when you show your own personal tax returns, it's going to paint a picture that might seem that, well, he just doesn't earn a lot of money. However, because this has happened to me a number of times whenever I've bought or refinanced, all I ever have to do is provide all the financials for my corporation. And lenders understand this. It's not a scary thing. They go, okay, we get it. You really own this company, and yes, you pay yourself a smaller salary. It has never been a problem for me. If I only showed my W-2, it might be a problem. But because I own the company, I can show that, and it does not create a problem around refinancing or getting a loan. You're absolutely right. In fact, it is something that as soon as they see that there's a corporation, an S corp, and they see the financials of the S corp, not a problem, or at least hasn't been a problem in my experience. But I have a question for you. So this is something that I don't fully understand. So I'm excited I don't know if there's a clear answer here, but I'd love to get your thoughts. So here's where every year around tax time, I always wonder what I'm supposed to do for this. And I should just ask my accountant. So at my corporation, uh, is it better for I pay for individual health insurance, very common for people who are real estate agents. If
Yep.
if you don't have a spouse that maybe has a group insurance plan, you're probably paying individual on your own. Should me as the individual pay those premiums, or should the corporation pay those premiums for me, the employee? Curious to get your thoughts on that.
So regardless how do you pay it, it will be a business deduction. So your health insurance or self-employment health insurance will be a business expense. Sometimes it just depends on how do you basically engage with either the exchange or how do you engage with a third party or a group health insurance, because I know that some real estate agents are using associations or
Mm-hmm.
using sometimes like a mini PEO, like a professional employee organization. They're joining some solutions that they can run their payroll under a third party and therefore get a corporate level benefits. So it depends on this level of engagement. Regardless, we prefer that the business will pay all of your expenses, including all of your health insurance expense. But I think you mentioned something earlier. Even if you're not as disciplined and you pay some of your expenses privately or on personal card, make sure that you have this cadence or discipline that every 2 weeks or a month, the business is reimbursing you for those expenses. So now they become, part of your business expense. But again, health insurance, huge issue. We know, we are aware. By the way, Formations has 3 plans that we're offering specifically for real estate agents. It took us a while to find the right provider, but if you go to the Formation website under benefits, you can see and start doing some calculations about health insurance coverage, and in many times it's beat actually the coverage and the cost that you can find out there. But
Really?
regardless what you find as the health insurance, make sure that you run it through the business. And you also, again, health insurance is one of those weird things that you need to include it actually in your W-2. So as an S corporation owner, you need to include your health insurance in the W-2, and then you can deduct it under adjustment to income. So overall, you get the deduction. But again, one mistake that people basically are doing, they're not including their health insurance cost on the business, and by mistake, they put it under medical expenses on Schedule A on your itemized deduction, and it doesn't give them any benefit. So again, regardless how do you pay for your health insurance, make sure that the business is expensive.
And there's some really interesting expenses that S corporations can benefit from that I believe are unique to corporate structured entities. Which, for example, I have a monthly meeting that I hold at my condo for the business. I am the sole owner and sole shareholder of the business, but I am allowed to have, I believe, monthly meetings, and I believe even two events a year, I think, as well. So there are some really neat ways that you can increase your deductions by taking advantage. And this is not exploitative. This is actually what the tax code allows for. And big corporations do this all the time. They, of course, take advantage of every opportunity to save on taxes that is applicable and ethical. And we want all of you to do the same thing. So there's a lot of cool stuff that you will find out, but you need to have a tax professional that really is able to say, hey, you're a shareholder in your company. Did you know you can have shareholder meetings this regularly, and you can expense what the expenses might be for those meetings? So there's some really, really cool stuff you can do. Also, same thing with transportation. I know there are some, I don't think it makes sense in my situation because I've asked, but maybe I'm wrong, is that there are times when your car expense, whether you're leasing a car, whether you've
Yep.
purchased a car and making payments, that can also be, it might make sense to hold that in the corporation's name, or it might make sense to hold that individually and have the corporation help with the payments, or I don't know the exact structure, but there are a lot of opportunities. These are the questions that you bring to Shahar and his team and say, hey, I'm thinking about getting a car. Should I
Yep.
lease? Should I buy? These are what we need help for, because I'm actually in that process now, or I have a car that's been paid off forever. I don't really want to buy a new car, but I probably need to. And I'm like, ugh, okay, what's the best way to structure it? I don't want to figure that out. I don't know how to figure that out. I'm going to reach out to my accountant or Shahar and his team and say, hey, what's the best structure here? Does it make sense to lease? And I know there are situations where it can.
Yep.
And I just, I don't know the answers to that. But these are the things you bring, of course, to your professional.
So business use of auto is a huge topic. And today in the EV world, in the electric world, it's even bigger topic just because of the incentives of electric cars. For real estate agents, there's always the benefit of a car which is a 6,000 pounds and over. Then you can get kind of the truck bonus depreciation treatment. when you mention about lease versus buy, usually it's not a tax discussion. Usually it's a cash flow discussion. It's a financial discussion. But again, if you know your numbers, if you know your cash flow, if you know how much money you should keep in the business, how much money you can get out, you can make those discussion with yourself about what can I afford. Regards to business use of auto, again, the mileage rate is 10 out of 10 times better, unless it's a kind of 2020 pandemic when everybody is doing kind of they're showing remote and they're not driving. When people drive, usually the tax rate to deduct your mileage is way beneficial than my actual, because most of us, again, even if you drive an older car, the cost to maintenance today, most of our cars relatively low, which means I can take advantage by the fact that I don't have the actual expense, and the IRS is giving me almost like a per diem, like a flat rate per mileage, per mile. So if I'm driving, 20,000 miles a year, I can get, close to 12, 13, $14,000 of tax deduction. Usually I don't have such a cost to maintain, again, repairs, gas, insurance, etc. So know your options. DJ, one extra deduction that we love to speak about is also the business use of home. Us real estate agents, when we wake up in the morning, first thing that we do, we walk into our home office, start checking mails, what happened overnight, some research, what come available, in the morning on MLS or whatever, what's my pipeline going to look like? This is, a real office. Let's deduct some of your home office expenses. And now, when I'm actually traveling between, my home office into my business office, into my brokerage, it's not a commute, it's actually a business expense. So I'm gaining twice the benefit. And in general, what we just want to make sure that real estate agents understand is that the same as you're curious and aggressive and a hustler, at the top and at the front of the house, we want you to behave the same with your back office. Because sometimes when people got into their back office, they're a little bit afraid of the system. They're unsecure. We know that there's this FUD and FOMO, the fear, uncertainty, and doubt of taking advantage of the system, or the FOMO, I'm missing out on some expenses. Again, if you pick the right dream team, the right people around you, if you're curious enough to do a lot of learning, and by the way, we're telling agents they need to do also unlearning, because they're coming from such a biased relationship. My accountant told me no, 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 no. How come you guys saying yes, 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 yes? Because your accountant sometimes is running an agenda that has a conflict between him and you. And you need to find the partner that actually working for you and with you. And when you find those amazing people that will working with you as a partner, you will get a word of enablement of more things that you can actually achieve on your financial system.
And also maybe realizing that there's things you're doing that put you at risk for audits and additional payments. And so having this tax professional on board, and not just having one tax professional. I already have an accountant. I like her. She seems to be good. Here's what I don't do. Every couple of years, I should let someone else take a look and say, how does this look? You audit yourself, you audit other things in your life. You should audit your accountant, and the best way to do that is let Formations Corp, guys, I'm going to do this. And the thought of even breaking up with my accountant is a tough one for me, because I really enjoy them, but business is business, and there's no harm in having someone else take a look. And you know what, I've actually had this done in the past, and the other times people have looked at it in the last 13 years, I've had it maybe 2 or 3 times. I've had other accountants look at it. They go, you're actually pretty good. I would stay with the person. So, but even if you're just getting confirmation that you have a great person, it's worth getting a second opinion, just like you would for any sort of major surgery, any sort of, other health issue, your attorney issue. You're probably going to see a couple attorneys before you make any big moves. Formationscorp.com is the place to go. You can literally, I am going to do this, even though I love my accountant and I'm terrified of breaking up with her because I really like her, but I need to think about my business's best financial interest. And, maybe she's not as up to date on the more recent, sort of different changes in the tax code. So I'm going to send my stuff over to Shahar and his team. In fact, you can check me on it if you want to know if I really did it. Reach out to me and I will let you know what happened. But I promise that that's what I'm going to do, because now I am scared that there's things I'm not doing. In fact, I know there's things I'm not doing correctly. So I am excited to have Shahar and his team take a look at my corporate structure, see what I'm doing that maybe could be done better. Maybe there's a tax savings, or maybe it's just, hey, DJ, you're doing this thing and it's kind of risky. We don't want to see you getting audited. I've never been audited, thank goodness. I don't want to be audited. I certainly just don't want to go through that process. So guys, even if you have a great accountant, reach out to formationscorp.com and reach out to Shahar and his team. And this is what they do. You can hear the excitement and passion in his voice. By the way, somebody that gets excited about taxes is a unique individual. So these are the people you want on your team. You want your doctors to care about you. You want your attorney to care about you. You should also want your accountant to feel the same way. And guess what? Every year around this time, I all of a sudden go, oh my God, what do I get to expense? I never know. Shahar and his team are going to help you figure that out. They are going to give you guides and things that you can start tracking from here until, until tax season. And of course, all throughout the year to help you do that as well. Guys, formationscorp.com is where to go. Shahar, I wanted to ask one other question related to taxes is any other, by the way, top agents are doing this. So Shahar said something very important. I just want to reiterate. He said basically when you get to the $80,000 income level with your business, or the income coming in, whether you're a 1099 or not, this is when you probably make sense to consider it being incorporated. So, if you're at that level, and even if you're not at that level, reach out to your accountant and find out if it makes sense. I know for me, it took a couple of years when I first started in this business. My accountant said, you're good for now when you get to this level. And it was right at that $80,000 level. And that's when he said, okay, now we're incorporating. And it just completely changed my life. I wanted to just ask a question about one other topic, which is talking about cash. So when cash comes in, we talk about different things we can do with it. We can put it in we can save pre-tax dollars, put it into retirement savings. We can put it in a taxable accounts for money markets, taxable taxable investment accounts. We can also consider investing in what we would call syndication deals, real estate deals that are very interesting. And I didn't know about what we would call syndication deals until the last several years, where I had extra cash. I needed it. I didn't want to save it. It wasn't going to be used for retirement, but it was going to be used for future goals that I have down the road. And my partner in business said, let's take some of that money and invest in like a commercial, a strip center, for example. So there are companies that run, they're property management companies, or they also own the land, and they rent it out to, whoever, and you have to do your due diligence, of course. But basically, the main benefit to me, even though I do get some sort of monthly amount they send me, I get all my money back, hopefully, in a few years. But most importantly, is this a tax savings, because I get what's called a K1 at the end of the year. Can you talk just briefly about the brilliance of K1s and what they do to someone's taxes?
So by the way, K1 is what you get also from your S corp. This is kind of the form. There's a pass-through entity. So when you go and syndicate, with someone else, we see, multi-family homes. We see mall centers. We see some commercial development. And again, and what those syndication are doing, they're leveraging your money. They're taking your money as part of the equity, and then they borrow money against it to again, for remodel or for improvements. The K1 that comes back, usually come negative. It's come usually when, let's say I put $50,000. So the first $50,000 that I get back will be my return of my investment. It won't be taxable. But what usually happens is that those syndication, those big LLCs have net operating losses as they managing their syndication. And because you're a partial owner of that project, you're entitled to get percentage of those losses. So what we see those K1 coming negative, and because it's a passive income, because it's not your core main of business, but because it's real estate, you can offset it against your actually commission income. So when we see, people have the appetite for syndication, we encourage them kind of to time the syndication, the investment, such that every year we'll have a couple of K1s coming back as a negative, and that negative income, and again, doesn't mean that negative income, it's negative cash flow. It's just book value, how they use depreciation and loans and debt, basically, to allocate to the different owners. But when that came, K1 coming back, reported on Schedule E, page 2, and don't be confused with Schedule E, page 1, which was your rental properties. If you have rental properties and K1 and commission income, you can actually do something super interesting, what's called tax harvesting. You can offset gains and losses and make a really, really effective, a lower effective tax rate.
Absolutely. So yeah, I think I get 5K1s a year, and they are all negative, which I love. And that the negative number goes against some of my earnings in other parts of the business, or that's probably not the right way to say it, but it basically overall subtracts from
Correct.
my overall income, and that means less taxes, guys.
Exactly.
So
It subtract your taxable income. It's
that's
offset
right.
your taxable income in the end, which means there is basically both element to get you to a lower tax bracket sometimes. So you gain, a lower tax bracket to tax your overall contribution, but it's overall tax needs, but it's also offset real income one-to-one. And real estate agents has the benefit that most of them are what they call real estate professionals. In the eyes of the IRS, they're participating in real estate so much that the IRS allowed them, to take those passive activities and take them against ordinary income. One of the privileges that only real estate agents has due to the fact that they have such a big lobby, in Washington, D.C.
Well, that's true. That's true. I believe it's the biggest lobby of all industries is the real estate lobby. I don't know that that's true with a capital T, but I've heard that. So either way, it's a very powerful lobby, and yes, there are benefits to being classified as a real estate professional with the IRS. And in fact, I do not believe I am classified that way. So I need to talk to you to see if that would be appropriate for my situation. So I'm going to chat with Shahar offline, and I'm also just going to send him all of my information to see, number one, how is my accountant doing, and if he sees opportunities, there we go. And I'm going to reach out and possibly switch providers. So Formations Corp is where you go to learn all things Shahar and his team. This is what they do. They focus specifically on 1099 employees. Again, I'm not a 1099 employee anymore, but they also, of course, specialize in the solutions to maybe considering moving beyond 1099. And you all will be, this is a business. You want to run it like a business, and you don't want to, the time for just doing TurboTax is probably not the right call for a real estate agent. It's just probably not the right call depending on your income. Again, talk to your professional. This is not, of course, tax advice in any way, but it is something that you should reach out to your tax professional to get that advice. So reach out to Shahar and his team, formationscorp.com. I also want to mention that they have social media, and you think, well, does an accountant need social media? Yeah, of course, because they're able to give really great information in bite-sized format. They have several different accounts. They're all over Instagram, Facebook, LinkedIn, really everywhere. We will have links to that. But Formations Corp is where you can search for that in any of the social platforms. We'll have links in the show notes, also a link to formationscorp.com. Shahar, I am so grateful that you came on our show. Everybody who's listening, please give Shahar and his team a chance. Send them your information, reach out, have them take a look at what you're currently doing, and see if there's an opportunity to work together. Shahar, thank you so much for your time today. And we will, I want to thank our Shahar on behalf of our audience. Thanks for coming on. And also on behalf of Shahar and myself, we want to thank our audience for coming on the show. thank audience for listening all the way through the episode. Please remember to tell a friend about this podcast. We believe, the number one or number two most listened to show for realtors in the country. That's because of you guys. It's not because of me. So thank you for that. Tell a friend. Other realtors need to know about the show. Really appreciate it. Also, check out our sponsors. Our sponsors pay the bills. We love our sponsors. Please check out their products and services. We love them, and they have great stuff to offer realtors. And please leave us a review. Let us know what you think of the show, whatever podcast app you may be listening to us on. Let us know what you think of it. We will take that into account so we can continue to improve the show to better meet your needs. Shahar, thank you so much, and we will see everybody on the next episode.
DJ, thank you so much for your time.